A big welcome to you, Curt. I will leave the scene to you.
Okay, well, thank you so much. I assume you can hear me okay, Niels?
Yeah, that's fine.
Great.
Perfect.
Well, thank you so much. It's quite amazing, honestly, what you've done and accomplished here. I believe our chairman, Scott Patterson, is also on the call. And, you know, we've just been quite astonished at what you've been able to build for support for our business. And, you know, the most important thing I think I'll say is that we're just extremely gratified to have people like all of you who are supporting us, following us, cheering us on. It means a lot. And hopefully you'll be even more inspired after we answer questions and give you a quick presentation. What I'm going to do is I'm going to run through about I think it's about a 15 slide presentation to give you just a high level view of the business. A lot of you will probably already know these things. Obviously, I can't disclose on something like this any material non-public information. So I'll be careful and try to make sure that I avoid doing that. There's a lot going on right now in the business, as you guys can probably imagine. We're extremely active on a lot of fronts. So let me give you the presentation, walk you through that, and then hopefully I'll be able to help by answering a lot of questions here. So let me share my screen here. Let me see if this works according to plan. Screen sharing has stopped as the sharing window is closed, it said.
One per participant can share at a time.
Let me try that again. I see my screen. Can you see that now?
Yeah, that's now we see it. Perfect.
Okay, terrific. Let me go to the first slide here. There we go. Get to play. Okay. First and foremost, this is the disclaimer, of course, that we have to put on all these presentations. We won't go through that. Our business is all about social video. When we started this company, the basis of it, some of you may be aware that I had a long history with MTV back in the 80s and 90s as one of the largest producers of videos during that time. And MTV was kind of the voice of a generation of youth during that time period. It became a global phenomenon. It really was a voice of a whole generation. When we looked at the world, when we started this company, we viewed what we call social video. At the time when we started, really, that was primarily YouTube. Since that time, over the last 6 years, it's expanded obviously across platforms like Instagram, TikTok, Snap, you know, all of these different, Facebook, all of these different social media platforms that we're all familiar with. And for anyone who's, you know, when we started really a millennial, meaning 30 years or so or younger, and now much even more so what we call Gen Z, meaning 20 years or so or younger, social video is kind of their MTV of this generation. It's what they talk about, what they look at, how they think, how they interact with people. And so our entire business is built around that concept, that social video is what's driving the world right now. This is not a unique phenomenon. What happened, without going into a lot of our history, is frankly, even though we're experienced entrepreneurs, we made a lot of missteps. And my standard expression is we went 10 miles wide and 2 inches deep, or 10 kilometers wide and 2 centimeters deep. We changed that about 2.5 years ago. And the reason we chose India is because India really formed for us the quintessential platform case for what we were trying to do. What is that? That is the business of working with the leading social video stars and social content creators in that country, and there are many, many, many in India, curating and packaging the best of that for the programming that we're creating, and creating a destination that, for lack of a better description, would be the best of what's happening in the world of social video. And India is an incredible market. For those of you who have studied it at all, you'll know that not only is it one of the fastest growing companies in terms of what's happening from a business perspective around the world, and has an insane population of almost 1.4 billion people, of which nearly 700 million are 25 years of age or younger. I mean, it's kind of hard to wrap your head around that. 700 million people 25 years or younger. And so the size and scale and scope of the social media business in India is massive. Also, television is still a growing business. Newspapers, believe it or not, are still a growth business in India. So the media landscape in India is extraordinary. Television continuing to go up. All of us in sort of more developed countries have heard a lot about the demise of television viewing, et cetera. Television is still a very, very important medium in India and will continue to be for quite a long time. In addition to that, the rollout of fiber and broadband and OTT services, over-the-top services, et cetera, is massive. And then finally, the thing that's really become just unbelievably large in India is mobile connectivity and the advancement of smartphones and mobile phones and phones that can feature video, et cetera. So we looked at India and we saw just this incredible landscape for investment. I mean, some of you may know of a company there called QYOU. QYOU during COVID last year had 20 billion US dollars invested in it from companies like Google, Facebook, KKR, which is one of the biggest private equity companies in the world. So there's a massive amount of capital that's pouring into India right now to develop these platforms around media, around video, around mobile connectivity, et cetera. That's why India. So we decided to go very deep in India. We continue to do that. And we believe that we've really gotten a foothold, which we'll talk about in a second. But what is that? It's a television channel, okay? It's a 24/7 television channel that runs just like any other television channel that you would be familiar with, that's on all the major platforms. I'll show you that in a second. And we also distribute that same content, in some cases as a linear streaming service on many of these other platforms, or in some cases under our branded identity, we're just there as video on demand content or VOD content. That means you might go onto a mobile platform, go into the queue area, and you'll be able to see all of our shows and programming on demand. We currently reach about 730 million people in India across all of the platforms and devices we're on, with the real target right now being television, which I'll explain why in a moment. That's what the base of the India business is. In the United States, we run an influencer-powered platform that uses all these influencers here in the US to promote other people's products and services. So in other words, we go to TikTokers or Instagrammers or whoever it might be, and we create platform campaigns and content to have them promote what initially was primarily movie releases and now has gotten into gaming products and retail programs, retail outlets as well. We don't talk a lot about that business as much publicly right now. A lot of the focus is on India. That will be the case in this presentation, but I'll touch on that a bit at the end. Let's see, why is my slide not going here? That's interesting. There we go. So we now have in India the fastest growing youth media brand in the country. As you guys are aware, we've been announcing our so-called gross rating points, GRP, for quite some time. And up until very recently, frankly, we were chasing the youth other television brands in the country. Bindass, which is owned by Disney, MTV owned by Viacom, Zoom owned by Times of India Group. These are major global media companies, multi-billion-dollar businesses that have youth-oriented channels on television, which also exist on some of these other platforms as well. So we were chasing these that all sat roughly in the 6 to 10 gross rating point GRP area in the TV domain. Why do we use that as our main metric? Because television is the most measured and most accurate measured platform that exists today. From all these OTT and mobile platforms, it's still very difficult to get data about exact audience viewing size, et cetera. In addition to that, and probably more importantly, is that so-called CPMs, cost per thousand rates for advertising, and we're an advertising supported business, are about 10 times larger in general on television than they are in digital. So digital still sits way behind, and mobile advertising still sits at a much, much lower level than television. So we focused on that. The final thing is that television remains so relevant in India that it becomes the biggest loudspeaker that you can have in terms of promoting your brand and getting that out there in a very, very large fashion. So we focused on the television business, and we sat out at the beginning of this year to really chase these other brands in the early part, the first couple of months. What happened is we increased our distribution, and we started to increase the audience and the chatter that was happening online and elsewhere about our business. We shot up, and we've really just sort of rocketed, as you guys are all probably aware, in the month of April. We initially had about 45 million homes for distribution, a little bit more than that. We added another 50 million. The channel started to catch on because of our programming. And suddenly we found ourselves skyrocketing past these other youth channels in terms of our ratings, and now joining some of the other major mass market channels in India. What does that look like? If you look at this chart right here, this is actually a little bit old. This is as of April 4th. Now, as of April, whatever day it is, it's gone even farther in terms of what's happened for us. But you can see here from us being the red bar on this graph, where we were, back even in a year ago, a fraction of what was being experienced by these other channels. And Disney, as you can see, if you look in October, January, March, was really pushing BINDOS. I mean, they were really trying to grow BINDOS, et cetera. We have blown past these companies now and literally can proclaim ourselves as the most popular and leading youth-oriented television channel in India. So this is not something to be, taken lightly. And frankly, we're still looking for the market to catch up really to what's being achieved here and to what we're doing. What's driving that? Programming. Programming is always what drives viewership, and they have to love the shows that you've got onto your channel. We have the advantage when we're curating and bringing content in from social video channels. We have the ability to know whether they're popular or not. That animation show in the middle, some of you might be familiar with a series called South Park, or a series called Family Guy, or a series called The Simpsons. Animated programming has a long history of providing great lift to a number of networks historically. We found some animation on social video that we knew was popular, and this animation programming, this animation programming has really taken off for us in India. And it's become sort of our Simpsons or our South Park at this point in terms of what's happening. In addition to that, the show on the left that you see, which is called Kia Bolta Insta, what that means in Hindi basically is what's happening this week on Instagram. Instagram is an extremely popular platform in India. Those two individuals are Instagram personalities in India, and they basically host a clip show that shows the funniest programming and the most bizarre and crazy stuff that's happened in India over the preceding week or two, which has also become very popular for us and is a format that we want to continue to build around other social platforms. Gobble is a very, very popular online food channel. Food content is very popular for us, cooking and things about how to prepare food, et cetera. So we've got a lot of programming that goes into that. One of the things you have to realize about our model as well, all of the creators of this content, they're online talking about how, oh, watch my show on the QYOU India. Go see my show at 8 o'clock at night or 6 o'clock or whatever the time may be on QYOU India. They're actually promoting, and there's a virtuous cycle that exists between the content that we're placing onto the channel and the social promotion of that. In addition to that, and not to be lost a detail about this, is that in India on television, you have to go through what's called S&P, Standards and Practices. Standards and Practices is the clearing of that content before it goes on to television. If we show a clip that shows someone smoking a cigarette, you have to place a a notice underneath that says smoking may be injurious to your health or something of that nature. To show someone riding a scooter, you have to say, if you ride a two-wheeled vehicle, you must wear a helmet. This is part of India law. So we actually provide in an interesting and sort of unspoken way. We're almost a service provider to these YouTubers and social video content creators as a means to get that content onto this big sort of broadcast platform for them to show their stuff. So we've been very, very successful as a result at getting top social stars and video onto the channel. We're continuing to develop this. And the final thing I'll say about this is we have a massive amount of data that we receive on a weekly basis. That's one of the very, very good things about Bark. When you subscribe to it, they pour data onto you. So we know what regions it's coming from, what the age groups are that are watching, when they're watching it, what the competitive programs are. We're constantly analyzing the data to be able to drive this. And frankly, I'd say we have a superstar team that's been doing this for us, which is largely responsible for the rise in our ratings. The other thing is distribution is key. That top line there that you see of Free Dish, Tata Sky, City, and Dish TV, those are all television providers. And they're among the major providers that exist in India. We're not on 100% still of all the television outlets, but now we reach over 100 million TV households. And obviously that's been a large part of what's the rise of our business as well. The line below that, those are mobile and what are called OTT or over-the-top providers. Well, they're not as important to us today in terms of revenue generation. They're extremely important platforms for us to be on, to be building our brand on. And so there's a lot of work and effort that's going on to begin to monetize those more effectively, to build our presence on them more effectively, and to gain audience share on those platforms as we go forward. Below that, Samsung TV Plus and Amazon Fire TV and QYOU and Chingari are app-based platforms. These are app-based platforms that you load on your phone or computer. Samsung TV Plus and Amazon Fire TV are television platforms that are directly connected to internet connectivity. Those bottom two rows are all about the future. Television for us right now is important because, again, it's the loudspeaker for the brand. It's the Ferrari, if you will, of platforms to be on. And these kids can't get onto it. It's a growing platform in India, and it's where we've been able to create the greatest brand identity in the shortest period of time. But with all of that said, don't think that we're not extremely active on all of these other platforms that are beginning to grow in India. You have to realize that India is still a bit behind, Western and developed countries in terms of broadband penetration, mobile video consumption, et cetera. And so that's a transitional area that we're looking to continue to nurture and grow over the coming years. At the end of the day, again, we reach 730 million people across these platforms, and we're continuing to grow that on a regular basis. What does this translate into? If some of you have seen me speak in other forums, I sort of use what the meme of our business right now, which is ratings equal revenue. There's a direct correlation between your ratings numbers and the revenue that's generated from them. A lot of people ask us about the revenue. We'll be reporting at the end of May, and I'll come back to that in a second. But the bottom line is that we are seeing an uptick in revenue generation and an interest from advertisers that's never even remotely been experienced in the history of our time in India. What's happened since our ratings jumped up just into the 13 level in early April, and now obviously have gone way up into the high 40s, the inbound interest from advertisers has changed on what I would call a night and day basis, where they weren't returning our phone calls and we were hounding them previously. Now those calls are inbound. Okay, it's completely flipped around because they know that we're reaching a young and difficult to reach demographic. And so every major consumer products company, every major consumer products brand, you can make the assumption that we're in discussions with them right now. As you all know, most recently, we've now announced Unilever, Pepsi, and Wipro. Some of you probably don't know Wipro. Wipro is one of the 10 largest consumer goods companies in India. It's a multi-billion-dollar, I think they're a $10 billion valued company and have areas across technology, et cetera. Santor is one of the biggest brands in the soap business in India. Some of these other brands, obviously, you would be much more familiar with. The bottom line is that where we had what I would call second and third tier advertisers for the most part, even in the beginning of this year and certainly last year. We've now graduated to the biggest advertisers in the world, and we are negotiating terms that are much, much closer to the terms that would be negotiated by the most successful channels in India. You have to realize that that all happens in a transitional phase. None of this, you don't snap your finger and suddenly it all happens and you close the deal. These are negotiations. They take time. You have to figure out where the slots are going to run for the ads. You have to program into the programming. And so generally what you guys will see is the results of what's happening today in our ratings and the economics is mostly going to show up in the next quarter that we report. What you'll see mostly in this quarter would be from the previous. The next quarter we'll report is Q1. That's mostly based on what happened in Q4. So as a company, we're going to, and we're working on being able to come out to investors like yourselves and give some sort of, I'll call it broad-based guidance, I hope in late May, that can give some ideas that will give you, point to the massive revenue growth that we're feeling that's occurring for us and seeing occurring for us right now. But that won't be happening until then. While that's all taking place, keep your eye on the ratings. The ratings are the best guide to what's happening. Final thing I'll say about that, don't be surprised if our ratings go down. Don't panic if suddenly you see that our ratings drop from 48 to 38. Ratings are volatile. They go up and down. These change. The volatility of the ad deals that you do not change as much with respect to that. Advertisers know that. Right now, the fact that we've had 2 solid weeks in a row, 46.3 and 48, that's huge for us, because what they look for is they say, okay, where are you? Our goal right now is frankly to end up somewhere into the mid 30s. And when we started this march to build the platform, when we only a month ago, if we had had a conversation like this, I would have told you our goal was the mid to low to mid 20s. So we've exceeded what our expectations were in that regard, which means ultimately we're going to be exceeding what our revenue expectations were as well. This thing keeps, oh, there we go. Oops. This keeps freezing on me for some reason. Let me see what's, there we go. This has been our roadmap for quite some time. Since we focused on the India business towards the end of 2017, it was critically important, as I spoke about, to get content. So we've got a lot of content that has built up, as we noted in a previous slide, over 1,000 hours of series that we've got. We've got hundreds and hundreds of content providers, and we've built up and continue to build this up. This is something that never stops. We're always building our content asset. Once that was there, that's how we were able to attract the ability to get onto distribution platforms that were premium distribution platforms. People look at the channel, they look at the VOD content, and they say, okay, this is great. We want to put you onto our platform. That's a never-ending process as well, but we've really reached a critical mass there in terms of getting to phase 3, monetization. The monetization is what we're in the middle of right now. That's bringing on the blue chip advertisers. That's building our GRP to be able to support higher advertising rates. Again, you have to connect those two. Ratings equal advertisers coming in, but it also increases the rates that you can charge for each one of those ads. In India, you sell ads in 10-second increments. Even if it's a 30-second ad, it's sold in 3 10-second increments. That rate continues to go up for us and build as we continue to maintain these kinds of numbers. What's phase 4? We've just started that. We had a strategic investment from Times of India. That begins our brand building process. The goal really where we turn this company from just a highly successful channel into something that has blue sky potential in terms of value is when we become a brand. When we're on hats, skateboards, t-shirts, when a kid in India knows the Q in the same way that kids in the United States and ultimately across the world knew MTV in the 80s and 90s. And finally, where are we going? What's the future for us? One of the things that we're big believers in is what's called social commerce. I'm not going to go into much detail about this now, but social commerce is a huge business, and I'll talk about those two things here momentarily. In terms of the brand building, Times of India Group is the largest media company in terms of assets that it has in the media space in all of India. It's a 187-year-old company. They have newspapers. The equivalent in India of the Wall Street Journal and the New York Times. Those are both owned by Times of India. As I told you, newspapers still a very, very important medium in India. They also reach tier 2 and tier 3 cities and rural areas in these ways that are extremely important to us in terms of our distribution. They themselves own 12 TV channels, 73 radio stations, 50 plus digital platforms. One of the biggest platforms for OTT in India is MX Player, which is one of our partners. So, and finally, they own outdoor, which means billboards and, bus benches and advertising of that sort. They're coming in as a strategic investor through their strategic investment arm, which is called Brand Capital. What that really means is that they're also now our partner to help us build our brand. They're obviously incentivized to see our stock price appreciate much, much, much further in order for them to really make the impact and money that they want to make out of this investment. How does that translate? That translates into us being able to get extraordinarily preferred deals and access to all of these different outlets they have. And if you did any research on India and the media space there, et cetera, you would quickly find that TOI, or Times of India, is as sort of prestigious as you can get in terms of an outlet in this company. So to have them as a strategic investor into the business is extremely important for us going forward. Finally, social commerce. You guys should take a look, if you haven't looked into this, and Google later today, social commerce in China. It's a $300 billion plus industry that's only been around for 2 or 3 years in China. If you read about it and you read the metrics about it, you'll see that India is almost an analog, an exact analog for what's happened in China in the social commerce space. You'll hear me speaking more and more about this. Why is that? One is because as I've said, we have the loudspeaker of QYOU India on television to promote these influencers themselves, the social commerce area, et cetera, et cetera. And additionally, we have huge access to influencers in India, and keep your eyes on what we're doing. I think you'll be hearing more about what we're doing to make that happen in a more pronounced fashion. What that means is this is one of the areas we're looking for the future. Just don't think that we're just a TV channel. We're building a major media company in India. The dream here is to build what we refer to as QYOU Media networks. One of those channels, if you will, of media would be reaching out through social commerce, which is the ability of these individual influencers to sell products and goods directly to consumers. That's what this is all about. So when you think about our audience, and if any of you have kids 20 years of age or younger, you know how you have to pry these out of their hands. They're starting to, my teenage daughters, make purchase decisions and intent based on the influencers that are showing them things on their phones. Keep alert to this as you watch what we're doing and what's happening in India. This is a big area of growth for us. You don't hear me talk about it because it's not a revenue generating area for us today. But as we get into 2022, 23, 24, keep your eye on this. That's my segue into QYOU USA. Why are we so focused on this in the USA market? For exactly the same reasons of what I was just talking about. We have a platform that goes across all of this that we've built that ties us into influencers directly. You might know some of these people, even over in Europe, but these are some of the top influencers that we're connected to that we use for the various platform and content projects that we launch here in the USA to promote other people's brands and services. Ultimately, we want to connect this into that social commerce area, and that's why we're building and developing this here in the US, because we're such big believers in that. We have a huge successful track record with this business here in the United States. I can honestly boast that we have 100% execution and delivery on over-delivering on campaigns that we've done for partners. And we've built an extremely strong capability for navigating the worlds of Instagram, TikTok, and platforms of that nature around this area of influencer marketing. The gross margins are very good on this. A typical deal, a $300,000 deal, a gross margin, I think it's blocked right now. I think it's 53% on this example, but generally between 50 and 60% gross margins. The area, again, that you have to keep looking at here is the area of social commerce and where this is going to lead for us. That's going to happen in the future, but this is where we're still maintaining and growing our relationships with brands and influencers to be able to move into that area more as we go forward. Finally, while I think everybody on this page, I believe, maybe except for Glenn, is 45 years of age or more, we're all guys that have vast experience in building youth-oriented brands, digital brands, and media companies. Scott, who may still be on the call, Scott he wrote the second check, actually, be modest about it, but he wrote the second check back in 1997 that launched a little small Canadian company called Lionsgate Entertainment. And Lionsgate Entertainment, as you know, grew to become a major media company listed now on the New York Stock Exchange. Don't think for a second that a lot of the lessons that Scott and I have a long history with Lionsgate as well. Don't think for a moment that the history that Scott and I had with Lionsgate, a lot of the moves that they made, the things that we went through are not models for what we are looking to do for QYOU Media going forward. We're aspiring to much greater things than we have today. We had a lot of, frankly, missteps and misstarts and wrong steps in the company, which were extremely challenging and took us to the edge of the cliff, which is not uncommon for new businesses and entrepreneurial businesses. But we're very, very confident that we've built foundations on both of these businesses, certainly in India, that we can turn this thing into something that can have massive, massive value going forward for our investors. So, Scott and I haven't sold a share of this stock. We don't have any intention to. We're here for the long run, and we're committed to delivering for the investors that have supported us and to build this thing into something much larger going forward. So with all of that, I'm looking at my phone here. That took a little longer at 7:35. Let's open it up for questions.
Yes, thank you very much, Curt. My name is Jacob, and I'm the one who will ask you some questions.
Okay.
I will say thank you very much for really positive and amazing presentation. I am sure it's a really good investment. I had that feeling. I think everybody else who are listening think this is a good investment. So thank you for using your valuable time with us. I will ask this question we have from the group. So you was talking about a bit about your future in the company and the future for the company. So what is the strategy 5 years ahead, and what is the big vision 10 years from now is the first question.
Okay. The strategy, if you look at our business in India right now, you see one channel. Okay. The way I would best describe it, the simplest way, is that where there's one channel called the Q, we ultimately look at having Q India networks. Okay. So there's going to be more than one channel. The first area we would go into what's known in India as vernacular channels, which are channels in different language groups. You guys may or may not be aware, but there are different language groups, Telugu, Tamil, and more, that have, in some cases, 60 million, 80 million, even 100 million native speakers in those languages. So these are language groups that are the size of large European countries. And so one of the things that you'll see us doing as a first move is to start to roll out more television channels that are the same identity as what we're doing right now in Hindi. Hindi being by far the largest language group in India. It's about 700 million native Hindi speakers, or more than 50% of the country. And then there's another 200 million Hindi speakers on top of that, so about 900 million people. We operate right now, which is what's known in India as HSM, the Hindi speaking market. What you'll see us do is you'll see us start to roll out more channels, and this will happen over the next 2-3 years. You'll see us roll out versions of the same content style, same everything, but they'll be directed into the language group of a specific large group in India. Like I said, these are the smallest of them would be a group that has 60 million native speakers. So we're talking about countries that are the sizes of Spain or Germany or the UK, et cetera, in terms of what their populations are. In addition to that, you'll see us roll out channels that have vertical subject categories. So for example, food and cooking. There might be a Q Food and Cooking network. There might be a QYOU Fitness and Lifestyle Network. There might be a QYOU Esports and Gaming channel. So you'll start to see as we gain success to go, hello, you'll start to see your son's looking over your shoulder. You'll start to see us, it's okay, I have a lot of kids. You'll start to see areas where we are getting into vertically based channels, which then allows you to drive into specific advertising categories, et cetera. When I call them channels, don't get locked into just thinking about them in terms of, it has to be a TV channel. It may or may not be. We might launch a channel that's a video on demand channel that's just on an OTT or mobile platform. These are things that you'll start to unfold, and the hope would be in 3 to 5 years, you'll have what would be QYOU India Networks group that exists in all these different formats. In addition to that, now extrapolate that concept further with the idea of what I was just talking about, social commerce, okay? Imagine now you've got these different channels and abilities to speak to that audience, to bring advertisers and put them in front of that audience, and through gamification, through transactional capabilities, through e-commerce connectivity, you're able to start to transact with them in a different way. I'm a huge believer that I'll call it the old school style that I've been around my entire career of a 30-second television spot that sends you to the market to then buy I believe it's Tuborg beer. I think that's a Danish beer. At the grocery store. That's not going to work for these Gen Z and millennial kids. They're going to be much more active, and they're carrying around in their pocket a transactional device to be able to do things instantaneously. We're headed there in India. The most exciting thing about where we're at is that's just starting in the world everywhere. That's going to start to penetrate India, and we're going to be incredibly well positioned as a media company and as a brand to take advantage of it. That's the 10 years from now where we're at. And frankly, that's the 10 years from now why we think we'll be a multi-billion-dollar business there.
Mm-hmm. Well, thank you for the answer. It was really positive. You have mentioned earlier that the cash flow will be positive in Q3. Are we now talking June? Already?
Yeah, I mean, we're in the middle of assessing all of that right now as we speak. It's in all of these high growth businesses, there's always the battle, I guess I'll say, between getting to cash flow positive and also continuing to invest in the growth. So we analyze that on a weekly, monthly, quarterly basis. Our revenues are going to grow at a point that we feel pretty confident that we can reach that. Although now I would guess it's probably going to be more into calendar Q3 of 2021 than it is going to be in June of 2021, which was what we were originally targeting. I'm not providing yet official guidance in this regard. Part of the reason for that, frankly, is that we didn't know at that time initially that we were going to raise the kind of capital that we've raised to date. So we have a lot more capital in the company and a better ability right now to reinvest in growth. And so we're looking to be able to do that going forward. So I think what you should really look to right now is as we start to release numbers and as we start to give what might be not necessarily specific guidance, but more sort of, I guess I'll call it light guidance or high level, I guess I'll call it high level indications of what's happening on a revenue basis for us. What I can assure you is that on a 12-month quarter over basis, and even on a previous quarter basis, our ratings are only going one direction right now, which is up. That's we're growing. And as I said, because we're more at 48 at the moment instead of 25, even faster than what we originally projected on that level.
That's cool. Good to hear.
I just can't talk specifically about numbers of things that we haven't released publicly.
No, of course, and you only answer what you can and what you want. The question number 3 is, your 3 advertising deals this week, how will it affect revenue this year?
Sort of the same answer as the last one, which is that, I mean, there's 2 components to this. I just had a long call last night with one of the probably most successful ad sales people in the last decade in India on television. And their advice was, don't go too fast. Don't just sign up deals immediately. You know, hold the horse back a little bit, because what happens is you're negotiating rates against that advertising. The way it works, again, is there's these 10-second increments, and whether it's, 500 rupees or 1,000 rupees or 1,500 rupees or whatever the amount is per 10-second block, that's a negotiation that goes on. When I talk about ratings equal revenue, that's true, but there's also no direct amount. So it's not as if, okay, if I'm at 50, that equals 1,500. It doesn't work that way. They're negotiating with you to try to get the lowest rate possible. You're negotiating to try to get the highest rate possible. It's a supply and demand issue as well. So this is, something that we're working on very hard right now. To be honest, we've had people come to us to do already 1-year deals with us, and we've resisted that. It's very, very, very tempting, because you look at it and you say, oh my gosh, this would take a lot of stress out of our financial picture if we could sign this one big company up for a 1-year deal. And we're talking about those kinds of things, but we're not doing those yet. We're tending to focus on shorter term deals right now than what we've had. What I probably shouldn't say publicly, but I will say, is we expect to do more revenue a month confidently right now than we've been doing previously in a quarter, significantly more. So the revenue picture is looking much, much brighter than it ever has in the history of the business.
Mm-hmm. Like the rest of the world, we also have Corona in India. So our question is, when you are so hard hit by COVID-19, which are expected to peak in May, what consequences does it have? Do it have impact going back to normal, like less viewers or something like that?
Yeah, it's interesting. We actually got hit really, really hard by COVID over a year ago when it first started. The whole company did. It almost took us down as a company, because we had businesses that were advertiser supported and advertisers pulled back on all of that. Kind of where we are today in India is where we actually thought we were a year ago. In hindsight now, we realize we really weren't, and it turned out to be advantageous because we improved the channel, we improved our distribution, we improved the content. So in hindsight now, it actually, I don't want to use COVID as a blessing. That would be horrible. I'll just say that we were able to do things that were able to help our business. I think the outbreak of COVID has caught everybody off guard in India. It's come as a surprise to everyone. Our office is closed down there right now, our main office in Mumbai. I mean, people got used to work from home a year ago. And so it's much more, our setup, if you will, our ability to operate is far better than it was a year ago when this happened and nobody expected it and everybody was scrambling. Currently, it's not really having an impact on us. Whether that trickles and how long that lasts, and does that affect advertising in India in what's known there as the festive season, is hard to predict right now. That's in sort of the October, November time period in India. That's kind of their Christmas holiday season. And so it's a little bit too early to tell what's going to happen with advertisers there. So my answer to that question would really be, obviously it's tragic and unfortunate. I just got a message before we got on the call that we were actually doing some research, because we regularly run research. We were doing some research in rural, what are called tier 2 and tier 3 cities there, about actually a new tagline for the company. And we had to shut that down because we couldn't do it. And so there is an effect, and it's obviously a human tragedy and terrible on that level. It hasn't impacted us yet, and it's a little too early to tell how it's going to look down the line. We're still actively engaged, as I said, with advertisers and brands, as we speak.
Thank you.
Good. We have some very interesting questions coming up here at the chat, especially one from Jens. From an investor relationship angle, how do you plan attracting more investors? Spread the word about QYOU.
Well, yeah, I mean, the reality is that the focus of our investor strategy has been number one on Canada. That hails back to Scott Patterson, our chairman, and his relationships that he's had there for 30 plus years in the what's called Bay Street, which is the Wall Street of Canada. And so that's kind of where our focus has been. We've extended that a bit into the US as well. And we
Gostaria que det tager op til et kvarter.
Mohammed, you may need to mute. There we go. Thank you. And we have, you know, dabbled a little bit in Europe. What I would say to that, and Niels, this really points to kind of what you've done. The number one priority for us as a company, which we think we've achieved some success in to date, is the online investor world. Rather than, I'll call it the regular, you know, stockbrokers and offices. That's obviously important to us, but we feel that we've done a fairly good job with a small army of people that we have deployed that are helping us get onto the chat boards, the Discords, the Reddits, et cetera, and starting to try to create some of the groups that frankly are exactly like what you have done, because we think that what I'll call the, you know, retail online investor world is, frankly, I'm a personal believer that that's something else that's changed during COVID, that people were stuck at home. They weren't able to go to the bars. They weren't going to their friend's house to party. They were at home. They had access to their computer, and it spawned a kind of revolutionary thing that was already there, but sort of turbocharged the revolutionary concept of all these online communities existing. Ironically, you know, I look at you, Niels, you are an influencer to me. You're a financial influencer. I mean, you literally are. I view you as an influencer marketer to the financial community. And so doing exactly what we're doing right now is what we're really focused on, more than, you know, putting an ad in a newspaper or doing a physical roadshow. It's about doing things just like what we're doing right now. That's why I'm doing this, because I want to be able to speak directly to communities of people that are interested in what we're doing. And the irony of it is, that's exactly what we do as a business. We offer, if we have a cooking show that's in social media that has a following there, we offer a brand or advertiser the opportunity to speak directly to the community of people that are interested in cooking. This is a community of people that are interested in investing. So I think the number one way that we plan on doing IR going forward is to leverage people like yourself and groups like yourself to get in front of people, and hopefully, you know, I can't think of exactly the story, but you know, it's the one person lights the candle and then they light the next one, and by the time you're done, 10 million candles are lit. It's kind of, that's our strategy that we've been executing on. We started it with some friends back in really October, and we believe it's had a lot to do with the rise of our stock to date, and will continue to be super important for us.
Okay, very good answer. Well, what about going forward? Have you make any thoughts about parallel listing for the stock in India or US?
Yeah, we again, I'll talk about this in the most general sense. And again, I'll refer to Scott Patterson, our chairman. Scott has taken many companies from starting out on the Toronto exchanges and moving to NASDAQ, or in the case of Lionsgate, the New York exchange. We certainly have our eye on that. We also certainly have our eye on things like listings in India, you know, the Bombay Stock Exchange. Obviously, there's London Exchange, et cetera, et cetera. So this is something that we have our eye on. We're not going to, I hope or think, be premature in terms of executing against something on that level. But you can assume that we talk about it, we're looking at it, and that we have people on our team, principally our chairman, Scott Patterson, who have significant experience in moving fast-growing businesses onto larger and more prominent markets.
Thank you. Thank you. Can you put some words about the competition in India?
Yeah, I mean, you know, 3 years ago when we really went sort of full tilt on this strategy of saying, okay, we're going to make India the place where we're going to build this thing and show the world what can happen. From that moment, competition has always been, lurking over our shoulder and been something that we've been concerned about. Frankly, for no other reason than India, much like China and countries of that ilk, copycat stuff is very, very common there. And they have a lot of people who can move quickly and do that. Probably one of the things that, again, I don't talk a lot about, but that we're probably most excited about is we've now built up a pretty large lead over anybody who wants to get in this game. If you think about the slides that I was showing, the manpower that we've got there, the distribution that we've got there, the content library and asset we've got there, the advertisers that we've now got there, we have an infrastructure that we've built that, there was a reason after a period of time that no one really wanted to take on MTV. I mean, anybody could have started another channel, and some attempts were made to start other channels that showed music videos back in those days. But MTV built a juggernaut around the brand and the asset in such a way that it became extremely difficult for anybody to penetrate that. We, are not cocky about this at all. We are constantly aware of it. We do know that we're the only people that are doing this. Part of our slogan, which we don't have yet, so I can't reveal what it is in India, revolves around the concept of it's different. This is different than anything else that you can see on television. One thing we know, there's nobody like us. We are absolutely unique and different. That can be scary sometimes too, but we're absolutely unique and different at this moment in the India marketplace. Do I expect people to start to do things that are similar? Yes. I mean, I use the example of ESPN, the sports network here in the United States. When it started on cable television, there were no other full-time 24-hour sports networks. Now there are dozens and dozens of them. The entire market around that grew. Because we work in the world of social video and it's so explosive, we expect other people will do things in this area, and that's without question. But we do think that on a brand basis, which is also why the branding is important, we have a lead in the market right now.
Thank you. Thank you.
Okay, we will continue with some.
Did I exhaust the questions of 221 people already?
Yeah, that's right.
No, we have
a couple
more.
more. I've got time for a couple more if you have them.
Yeah, we have a list, but I will take some because you have already answered on many of our questions. So, but there is one more about Corona, and that sounds like this. Has QYOU considered taking responsibility for the Corona epidemic in India? Example, by allocating 2 to 5% of advertising time to health information or something like that.
Yeah, that's
You understand the question?
Yeah, I do. That's a great question. We have not done anything yet proactively in that regard. Our COO, actually, Krishna Menon, is extremely dedicated and has been on the front lines in many ways in India in helping get people food and provisions and other things. He does that on a personal basis. And we've had discussions on a corporate level about what we may be able to do in that regard. The truth is we have not done anything specifically as of yet, but it is something that we've discussed internally to figure out how we might be able to do something to help people there and get people engaged, even if it's just running donation efforts or other things on the channel itself.
Cool. And next question. Do you have any plans for going forward for parallel listing of the stock in India? Or
we
US?
already have that one, Jakob.
Yeah, we got that one.
Sorry.
That's okay.
But
and we have a last one.
Sure, let's go one more.
Okay, Niels, you will find the last.
Yeah, there would have been some debate about QYOU is actually, maybe not yet, but close to being an acquisition target. How do you react on that? Is there any risk that you get a price that's too good to refuse?
Well, I think right now that would have to be $1 billion. So first and foremost, I'll make the statement, because I can make this as candidly, is that no, we have not received any inbound acquisition at this stage. Is that possible? Of course, that's always possible. What I will say is that even though we have a large number of shareholders, we also have a large number of shareholders that are closely held across, frankly, a lot of Scott Patterson's personal relationships that he's built over the years. And as you know, as well as ourselves internally, et cetera. We are committed, is the word I would say, to building a multi-billion-dollar asset. That's what we're attempting to do here. Does that mean that along the way, somebody's not going to come in and offer an amount of money that is irresistible for everybody from ourselves and our shareholders? That's possible. But I can tell you right now, it better be a pretty strong multiple over where we're at in terms of our market cap, because we're not going to just give this away. It's taken too long. There's been too much bloodshed and too much hard work to get to where we are today. And we're confident about what the future is. That's probably most important of all. We are confident about not where we are, but where we're going. And so, you know, at current levels, the answer is not overly concerned. Can someone come in and make a move to do that? Obviously, someone could do that, you know, today. There's no way of controlling that. So, but we're not actively looking at that in any way. What we're looking to do is to build, solidify, and grow the business and roll out all the things that I'm talking to you about right now. And I'm, you know, I've been around doing this for a long time, not a young man anymore. This is my last rodeo. I'm looking to be here for the next 10 years, and 10 years from now, I want to be able to look back and have Q at a minimum in India and maybe in other territories around the world, who knows, be as commonplace and well known as MTV was in the United States at that time. That's what the goal is here.
Okay, seems great. Curt, I have just a few more, if it's okay with you.
Yeah, sure.
I want to ask you about many investors thinking about penny, is a bit worried about penny stocks, especially for further dilution. How do you see that? Is there any risk that we will have dilution, and or is there enough money for development through the advertisement?
Yeah, we you know, I guess my answer to that would be is that certainly not at these prices. Okay, I'm not going to sit here and proclaim that we would never raise more capital if the appreciation on the stock was large enough where it made sense to us as a business to bring more money into the treasury based upon where we were on a stock price basis. That's something that I think any company would always look potentially to do. That's not something, again, as I said in the previous answer, it's not something we're looking at right now, and we wouldn't at the kinds of prices that we're at. But, you know, I might have a different answer if we were 100 or 200% higher in our price than we are today. So these are things that we always talk about. With all of that said, the company is in the best financial position it's ever been in the history of the business. We have a strong treasury balance. We have the ability to make smart investments where we want to make them now, and where we think that we need to do things that can drive our position and brand identity and value. We discuss those every day, every week, and so we're in good shape right now. So nothing on the immediate horizon, but you know, never say never.
Okay. That was really great to have a lot of the questions answered.
Well, look, we can do this. You know, this doesn't have to be the only time we ever do this in our lives. I think, you know, what I would sort of close with is, you know, first and foremost, as I said at the very beginning, and for anybody who came in later, we're humbled is the word I would use. I'm humbled by what you've built, Niels, the following of all of you, your support of us. It really is very meaningful. And I take this stuff personally. You know, this is my baby. And so I'm a founder of this. And this is an idea that there were, you know, I had a conversation at dinner last night where I was saying to someone, everybody's forgotten that Netflix almost went out of business 4 or 5 times along the way. Lionsgate struggled mightily for years and years. Tesla almost went out of business along the way. You know, businesses struggle and go through hard times. And we've had our share of that leading up to this moment. Does that mean it's going to be a straight line to the top from here? Of course not. We'll have ups and downs. I say all the time, there's no one day, 1 week, 1 month, 1 quarter that anybody should look that should define us in terms of what we're doing as a business. We are in this as a long-term. This is not a pump and dump. This is to build a long-term major media asset. That's what we're doing here. And will we succeed? Well, I sure as hell hope so. I've spent a lot of time of my life, a big period of my life doing this, and we have a long ways to go. I use American baseball all the time to talk about, it's a 9-inning game. You know, we're in the 3rd inning. We have a long ways to go, and we expect the next 2, 3, 4, 5 years to be just an incredibly exciting and dynamic time of growth for the business. So that doesn't mean that I, you know, think that somebody shouldn't jump in and out if they want to make 5 cents or 10 cents or whatever. That's up to people to make those individual decisions. But I can tell you, as a management team, as a company, we're committed to this as a long-term strategy and building an asset that has real value on a sustained basis. So that's what we're trying to do here. And that's a long-term commitment, not a, you know, what happens by next Friday commitment.
Thanks, Curt. I really think it sounds very promising, and I also think that many of the people here in Denmark look forward to follow the company, and hopefully,
well, when we get to our first plateau, not just in ratings but in price of maybe a $1, then I'll fly to Copenhagen and we'll have a big party with all the investors there.
That sounds great. I will sure make that arrangement.
Maybe we'll even be able to do it maskless.
That sounds great. Curt, thank you very much for your time. And yeah, as you told, we will try to do.
Yeah, we'll do I mean, you know, doing these once a quarter kind of thing or whatever. Totally happy and open to doing that. Not a problem.
And I would also say that one new thing I've heard today from you is about the e-commerce perspective. I think it sounds really interesting.
Yeah, take a look, everyone, at that. Just Google social commerce in China. Just Google social commerce and read some articles about what's happened. You'll see that it was a rural phenomenon. Again, some of this stuff, you know, doesn't happen by magic. There's a reason we're penetrating rural India so aggressively right now. So read about that, and I think you'll see why we're very excited about that for the future.
Thank you so much, Curt.
And everyone,
take care, everybody.
Thank you. Have a great weekend. Okay, bye everyone.
Bye bye. Thank you.
Bye.
Thank you very much for your time.